Yeah, hi, this is Mike, CEO at Global Investments, and today I would like to talk about, we get a lot of clients asking about the difference between investing in Cleveland or investing in Detroit. And what are the reasons I should invest in Cleveland? What are the reasons I should invest in Detroit? And I think, obviously as a company, we've been selling in both cities. We've been selling in Detroit for coming up to 10 years now. And we've been selling in Cleveland for coming up to 5 years now. So we've got a lot of experience in both cities. Personally, I know both cities really well. I've spent a lot of time in Detroit and a lot of time in Cleveland. So I know the good areas, the bad areas, which is really important. And I think before getting into the differences between them both, I think it's important that there is a trust aspect involved, that we know what we're talking about when it comes to both cities, because I think that's one of the reasons people come to us, use our services, pay us a fee, etc., for our knowledge of the cities, the fact that we've been in business 11 years, and so on. But I still think, as a buyer, as an investor, when you go onto our website or when you take a look at our website, you think, okay, Detroit, Cleveland, which one should I look at? You know? And I think, as a buyer or investor myself, I think if I put myself in that position and let's say, for example, I had $100,000 available and I was wondering, okay, so where am I going to put my $100,000? Do I put it in Detroit or do I put it in Cleveland? So it can be a difficult question, I think. But I think if you look at both cities and you look at the positives and the negatives, not negatives, but I think, not using the word negatives, I think we should use the word risks, the risks involved in both cities, because I think that's what the most important thing is. I think which city you put your money into is how averse you are to risk. Because I think, knowing both cities very well, I think that the risk involved in buying in Cleveland at the moment is higher than the risk involved in buying in Detroit. And the reason I say that is, like, we've been selling in Detroit for coming up to 10 years now. And Detroit is a city, I mean, it's come back so strong. Like, you go back 10 years ago, Detroit was filing for bankruptcy. The place was like a war zone, wasn't a nice place to live. And now the city is back on its feet again. You've had a lot of overseas investment, domestic investment. The federal government bailed Detroit out, pledged billions of dollars into the city. You've got the likes of Dan Gilbert. I'm not sure if you know who Dan Gilbert is, but he owns a company called Quicken Loans. He also owns the largest portfolio of residential property in the whole of the US. So a very wealthy individual. And he kind of rebuilt Detroit by his investment as well. And I think he actually quadrupled his net worth from $2 billion to $8 billion purely from Detroit investment. Now, Dan Gilbert is actually in Cleveland right now. He owns the Cleveland Cavaliers. So he's putting a lot of money into the city right now. But my point with risk and how averse you are to risk is very simple. I think Detroit is an established market right now. So I think the city is back, it's on its feet. However, the downside for the investor, it's seen, not downside because it depends on how you look at it, but the city has seen a lot of growth. So we were selling properties 10 years ago for $10,000. Yeah, $10,000. And the same house today would cost you $80,000 or $90,000, $70,000, $80,000, $90,000. So the people who invested their money 10 years ago are very happy because they've seen good profits and good capital appreciation. However, the risk involved 10 years ago was huge. They could have been putting $10,000 and kiss goodbye to it. Nobody knew what was going to happen with the city. So I think the people who put their money in all those years ago, they were adverse to risk, believe me, but it's worked out for them. Now, So I think Detroit is a market where you can get great cash on cash return. When I say cash on cash return, I'm talking about your cash flow, your return on investment. Is it 15%, 16%, 17%, which is good, So I think Detroit gives you that. But what I don't think Detroit will do, because I think it's seen a lot of the upside, Detroit, I still think it will grow in value. Don't get me wrong, there's still money going into the city. There's talk Tesla might go into the city. But I think it's a good, stable investment with low risk because the city's established. Again, you need good management and you need to look at the location, which in my opinion is the most important factor. So you need to look at all those things as well. But I think as a city, it's an established market. So I think as an investor, if you're looking for a decent return on your money, you've got $100,000 or $70,000 in your bank account right now, but you don't really want to put that much risk on it, then I would look at the Detroit market. Whereas I think Cleveland is kind of where Detroit was maybe 5 or 6 years ago. So I think in terms of the neighborhoods where the city is spending money right now, and the neighborhoods where overseas and domestic investors are buying, I think they're not as established as some of the Detroit neighborhoods because they haven't come that far yet. So I think, you'll see the streets, the blocks won't be as nice as you see in Detroit. But that's not to say in 3 or 4 years' time they're going to be. So I think in Cleveland, I'm not saying the risk is like it was 10 years ago in Detroit, don't get me wrong. But I think the risk is maybe like 4 or 5 years ago in Detroit, where it's seen a bit of growth, and Cleveland's seen certainly a lot of growth over the last 2 or 3 years. But I still think if you look at what's going on in Cleveland, the Cleveland Clinic, you've got Amazon, 2 distribution centers there. You've got Ford, the motor company, have pledged, I think $1 billion over the next 5 years. So I think Cleveland is probably one of the hottest markets right now in terms of potential growth and also return on investment. The return on investment will be higher because your price point in Cleveland for a single family home would be maybe $60,000, whereas in Detroit it's $80,000 or $90,000, and your rents are the same. So your return in Cleveland is higher. But like anything in life, the higher the return, the higher the risk, So I think as an investor and as a company, we need to make our clients aware of that. And I've had clients over the last 10 years who are very adverse to risk, and then I've had other clients that are not at all adverse to risk. They don't want to risk, they want very little risk. So I think it depends on you as a client. It depends on what you're looking for, what your requirements are. I think in both areas, the location is number one for me. Number one. Number 2, condition of the property. Number 3, management. You get all those 3 things right, and remember, you always have an asset. The asset is always there, and history tells us one thing. History tells us that, like, if we could all go back 20 years in time, what would we do in a time machine? We'd buy as much property as we can anywhere in the world, because we know over time property prices go up. So I think that's what we always have to remember. And even if a tenant leaves or you need to do a bit of work on a property, the bottom line is you own an asset that's going to go up in value over the long term. Maybe not the short term, but over the long term. So that's my take on Detroit and Cleveland. And again, I think, just summing up, I think it's down to the individual investor, what you're looking for. Obviously, your budget is important as well, but I don't think you should buy something just for the sake of buying it. It has to be right. Don't buy something because it's cheap and because it's got a high return. You want to buy the right house for you and your family. And if you're not adverse to risk, then my advice is to look at Detroit and a good cash flow. And if you are adverse to risk, look at Cleveland. And you're going to potentially have a higher return and potential growth over the next 3 to 5 years, without a doubt, potential growth. in the next 3 to 5 years, because I think Cleveland, I think we maybe have another year, maximum 2 years, before the market outprices itself, very similar to Orlando.